Hi, this is Brian McAvoy with Inside Out Trading, and if you don't like losing money, then you need to attend to your critical risk management. 3 overlooked dangers that cause unnecessary losses for traders. Now, what you're about to discover on this short video are 3 huge risks to your trading capital, and how, when unattended, these cost thousands of dollars, and also how to protect yourself from unnecessary losses in your trading. Okay, now, the unnecessary losses that I'm talking about, these occur from trading with a system that won't deliver, but you think it will. Also, trading without knowing that your system can deliver. Even if you have a good system, if you don't know it with a certain level, with a particular level of certainty about it and that deep knowing, you're always going to be open to all the emotions that can come in and make you, deviate from your system and second guess it. And the third cause of unnecessary losses is not having a way to verify a system without having to lose money and without losses. That's huge. Okay, now, all the basic about it, why do you have a system in the first place? Well, first of all, of course, to provide good profit opportunities. The second one is to control your losses and your risk management. And the third thing is to facilitate consistent decision making. Okay, so what is your trading system? Well, it's your decision guide, and it consists of decision points, decision criteria, and action steps at each point. Now, the critical decisions that are hopefully part of your trading system, if it's complete, are your entry, your risk management, and your stops. This is the individual, risk management on individual trades. Your reward to risk. That's a critical decision as far as whether or not you want to enter a trade, and also your exit. How are you going to take profits? How are you going to control your losses? Okay. Now, where many traders go wrong is they're looking at the wrong numbers. They'll play around with a system, either live trading or in a demo account. And they're like, holy cow, it works. And so let me share a real quick story about a guy who's just kidding himself. This was in a mentoring class that we had, where we were teaching traders how to build their own system based on a proven method. And what this guy did was he just wrote out real basic rules, and he started testing it in a demo account. And he's like, holy cow, man, this is great. I'm getting 3-to-1 risk reward, and my winning percentage is up here, and all this and that. And the thing is, he was just kidding himself because he hadn't properly verified it. And here's what we're talking about: is verification without losses. First of all, you do want to test it first with historical data and a demo account, so you can do it without losses. The main thing is you want to analyze the delivered results with your metrics, but you got to make sure you're looking at the right ones. Like I said, this guy, he was looking at the wrong ones. But you want to make sure that it actually does indeed measure up in reality, not what you think or hope. And there are 2 key metrics that tell the truth about your rules and whether or not they're actually working the way you want. The 2 must-know metrics that I'm talking about are the actual reward to risk. See, this is where the guy that I was just talking about, he was going wrong. He was not getting 3-to-1. He wasn't getting anywhere close to it. What he was actually getting when we measured it was closer to a 1-to-1, and that's important to know, because otherwise he would have been entering trades under a misconception. He would have been entering trades that did not really meet his criteria of a 3-to-1 reward to risk. And the second one, critical must-know metric, is the actual loss to risk. Every trade you go into it, you're saying, well, I'm only risking this much. Well, you need to actually measure it and make sure that your trading system is actually containing your losses. If the actual loss to risk is too high, that means that your system in reality is not controlling your losses the way you think it is. Now, you measure to verify your rules, and you want to measure the decision rules directly. Like I said, reward to risk and loss to risk, because those are your decision rules going into the trade. Is okay, yeah, I've got this much risk, so I can prepare for that kind of a loss if I'm wrong, and if I'm right about the market direction, you want to make sure that the reward is sufficient for the amount you're risking. Now, if you'll do this, you'll save yourself incredible amounts of time, money, and frustration, because it just plain takes too long if you just grab a system and jump into it and start trading with real money. Few ever get there to where they have that knowing about their system that it is a solid system, and they have the confidence in it to where they'll stick to it during a rough spell. See, too many people, they get way too few trades in with one system. They hit some losers, doubt and fear set in. And then once that confidence is lost, then they start second guessing it, and variations get created. And then the whole cycle begins. You know what I'm talking about. You've probably experienced it more than once yourself. Now, the way to avoid unnecessary losses Really, use the only tool that directly verifies your decision rules, because it takes risk into account. Go to the link below for more, insideouttrading.com/TPA/get.html. You really need to make sure that you're guarding yourself against these risks, because your trading system itself can be a huge risk if you, first of all, think that it's working and it's not, if you don't have the confidence in it to stick to it, if you don't have a way to verify it without having to lose money to find out. Anyway, go check this out. You'll be glad you did. It's Brian McAvoy with Inside Out Trading. Cheers.